If you look at the Nifty, the maximum call options were written at the 1400 rupee, 1400 strike, which
17,400.
7400 strike, which shows that there is clearly going to be a cap at those levels.
Well, those expectations can always change, Santo. If the market sees one big move, then all of those expectations can change. But that said, we have a lot on our plate in terms of stocks today, and it's time that we quickly dive into those, right? Starting off with Axis Bank, well, great set of numbers for the March quarter from the bank. The stock is likely to open in the green, given the sort of commentary that has come in from brokerages as well. One thing that stood out for me was the impressive loan growth of about 15%, which basically means that Axis is almost going toe to toe with some of the bigger lenders such as ICICI Bank and HDFC Bank in the space. We still have to see what SBI has done, but so far it looks like Axis Bank is trying to get into that third position just behind ICICI Bank and HDFC Bank. Apart from that, the guidance, asset guidance of 2% and OPEX is likely to increase. They have added basically, suggested that. But overall, the picture is very good because the earnings consistency from Axis Bank is rising on a quarter-on-quarter basis. We are seeing asset quality improving also, along with just as we have seen for ICICI Bank and HDFC Bank. So a very strong start beckons for Axis Bank.
I'd look at it slightly differently because clearly the company has indicated that it's going to invest more, which means that operating expenses are going to go up. It has taken back its guidance of about 2% cost to asset ratio, which it had mentioned. So which means that pressure on core earnings. Besides, it has increased its strength in the credit card segment by planning to buy out Citi. Yeah. But that acquisition has also is not exactly been cheap. It has paid a top dollar for that, which means that the payback from this acquisition is going to take time, and that will reflect in the earnings. So even if you see a brief pop from the quarterly numbers, I would say that over the medium term, probably you're likely to see the stock under a bit of pressure.
Santo, to that point, my only argument is that Axis Bank for the past few years has been trying to convert itself from a corporate loan-oriented bank to a retail bank. Right now, retail almost constitutes 57% of the company's, the lenders, advances book. And if they are going on to invest into, such businesses going forward, the market is only going to like that fact instead of, be skeptical of this development. So for me, actually Axis going on and investing into such retail-oriented business is a positive sign.
Okay. Quess Corp is the second stock on our radar today. The HR firm is a direct play on the ongoing talent crunch in the industry right now. You're seeing that across all sectors. The company's CFO was on CNBC TV 18 some days back, and in fact mentioned the fact that there are open positions, and every time you fill the open positions, more are created because that's the great wave of resignation.
At least in the formal sector.
Yes, moving across. Across roles, you're seeing attrition in almost every segment. What the company is now trying to do differently, it started engaging with the manufacturing and construction sectors as well. Now, both these sectors previously were not, approaching hiring in such a structured or an organized form, but now that's changing, and this is a big positive for firms like Quess Corp. So you could probably see the stock inching up in trade today.
Well, the only argument here is that manufacturing construction is the play there is not going to be as smooth as it is for, say, other formal sectors, spaces like IT and maybe services, the rest of the services economy, because let's not forget that creation of jobs in manufacturing and construction is still lagging behind compared to what we have to have if we want to achieve the growth rates of 8 to 9% at a GDP level. So yeah, this is something that was going to be a slow burning growth pathway for Quess Corp, not a high growth phase like that we see in the IT space or maybe other service related spaces.
And ironically, CJ, I was just looking at Quess Corp, 90% of its expense is actually employee expense of its own. Yeah. So, Quess Corp in fact is as vulnerable in some ways to the
talent crunch,
exactly. You're seeing everywhere.
You might see HR firms having a talent crunch going
and it's happening, CJ.
Anyway, moving on, Reliance Industries is going to be, it has been a stellar performer for the market over the past 3 to 4 days, and today also the stock is likely to be quite in the limelight because There are media reports that are coming out. The Hindu Business Line came out with a report suggesting that the company could announce a potential listing of its Reliance Jio as well as Reliance retail business going ahead. The announcement is likely to be, likely to happen in the annual general meeting of RIL. We always know that RIL's AGM is one of those big events for the market, and every year there has been some sort of a big announcement related to the company structure, company's investment plans, and this year also it seems market is expecting or building up to something major. Apart from that, Financial Times and Daily Mail have reported yesterday that the company is also looking to place a bid for pharmacy retail giant in UK known as Boots. Boots parent Walgreen Boots Alliance in the US is looking to get out of the UK business and wants to focus more on its core pharmacy retail business in the US, and therefore the opportunity has opened up for Reliance Retail and others to get into this. So Reliance is reportedly partnering with private equity firm Apollo to probably make a bid in the range of about £6 billion. And the hope here is that if RL can get into this business in UK, not only does it open the UK market up for it, but it can get the pharmacy retail giant to India and other South Asian countries where the opportunity for growth is much higher. We know that RIL is looking to get into the pharmacy retail space. It recently acquired an online pharmacy giant in India. So this looks like something that investors will keep an eye out on.
Indian Hotels, the next stock on our radar. Now, the company's fourth quarter earnings were lower than what market was expecting. However,
Absolutely.
that was largely expected because you had the Omicron wave during the January to March quarter. But if you speak to analysts overall, they're quite bullish on the stock, and one of the main reason being that there is a strong recovery underway in the travel segment right now. And according to Moneycontrol Pro, Indian Hotels right now has the strongest balance sheet in the sector, and according to Edelweiss, the kind of average revenue per available room that you're seeing in April is almost on par with the level seen pre-COVID. So you're seeing a very, very strong comeback here. So even if there is a slight miss on the fourth quarter earnings, this is a stock which clearly is set for good times ahead.
My only concern here, Santo, would be that after the sort of underperformance that the company reported in the March quarter in terms of net profit, given that if you, as I mentioned yesterday, if you take out the other income and the one-off gains, the company actually came out with a reported net loss in the March quarter, and that sort of a sudden surprise will make investors wary going ahead. So you might not see the sort of pop that Indian Hotels enjoyed in the September and December quarter, and even in the March quarter before the earnings came in. Probably the movement on the stock will be more circumspect going ahead, and market will wait for the numbers to be delivered before re-rating the stock higher.
Well, market always looks to the future. You keep saying this, CJ. If you wait till the company reports its numbers, you're never going to ride the wave on that.
Some companies you can't assume things. So, that is how market got it wrong with Indian Hotels in the first place. Finotex Chemicals is one of the best chemical companies out there, and the company came out with strong Q4 earnings for the March quarter. The revenues jumped about 62%. Net profit rose by 42%. Which is likely going to further add to the gains and the positive momentum for the stock in the session today. Even if you look at it from a technical point of view, the stock is basically looking like a straight up buy at this point of time. Most indicators on technical charts are giving bullish signal for Finotex, and I would not be surprised if this stock continues to be in the limelight for investors at least for another 1 or 2 months.
Well, in terms of the chemical space, the few earnings that have come in so far this month, they've fallen short of market expectations. So it's pretty much a mixed bag. Till about 3 months back, the widely held view on the chemical space was that this is a sector which will continue to grow for at least the next couple of years. But now, if you look at valuations, even for instance, Finotex, it's quoting at almost the market cap is 5 times annual sales. So these stocks are not exactly cheap. So I would say that one needs to be a little more circumspect as far as the chemicals companies go.
But that said, I think the market will continue to reward companies which are providing stability on earnings instead of providing a little bit of uncertainty. Even if some estimates have been missed, overall chemical earnings have been strong. That said, we have the market opening up, and Yeah, it's a very green show, huh, Santo?
Yes,
Very, very green show.
17,306, about 60 points higher, advances about more than 1,500 and declines of 300. So very strong start there. Nifty Bank is up.
Absolutely. Nifty Bank is up about 0.2%. Nifty Mid Cap has gotten off to a very strong start, up 0.7%. If I check some of the stocks, how they're doing at this point of time, I think we have very strong numbers coming out from
SBI Life
SBI, Tata Motors, Adani Ports is up about 1%. Tata Steel is up about 1.1% at this moment. Apart from that, what else are you
HUL
watching?
is down about
Santo?
0.5%. Divi's Lab is down about 0.5%.
Yeah, I think Santo, I mean, this basically, I mean, if you look at the, advances to decline, about 1550 stocks are higher on NSE to about 306 stocks which are lower. Basically, it's a broad-based gain. This is just, now it is no longer a short covering rally that we were talking about yesterday. It seems that market is probably finding opportunities at lower levels wherever there are stocks where the correction has been probably over the top and valuation comfort has been reached. Investors are looking to plunge into those stocks, and probably that is why we are seeing some of those counters move
The
higher.
FOMC meet next week is a big hurdle for the market. I think market still needs to go over that. Only after that will we be able to say, see, the Nifty has been facing resistance around 17,400 for some time now.
Right.
So we still need to break past that. Well, that said, the next stock on our radar is Gujarat Ambuja Cement. Good set of first quarter earnings there. It was slightly better than market expectations. What the company managed to do well was that it controlled its cost quite well, and that has added to the bottom line. However, analysts tracking the stock feel that this is something where more than fundamentals, the play could be on parent Holcim exiting India and what kind of price it can get for Gujarat Ambuja. So the play is more on the M&A part, and you've already seen a good run up in the stock over the last 1 month.
Yeah.
In case the M&A does come through, probably
Right.
I think SEBI will have its hands full. So that said, analysts are not increasing the target price for the stock much. They feel that it fairly reflects most of the fundamentals at current prices.
Yeah, I mean, given the news that that Holcim, from the Holcim side, that they are looking to exit the India business, I feel that a lot of the upside from that has already been priced in. And even if, as and when the news does come out, we do get a confirmation from who the buyer is, from Holcim. It's not. It's very unlikely that we are going to see further upside in the stock, given that market has become very efficient these days in pricing in such M&A moves. We have seen that with Z happen with Z earlier when the Sony merger was in question, and so therefore I don't see there is too much upside left on Ambuja Cement. That said, one stock that has come out with a very surprising move yesterday, and probably will benefit from it in the short term, is IndiaMart Intermesh. The company has announced a buyback of up to 100 crore rupees at a price of about 6250 rupees per share, which is a premium of around 27% to the stock's closing price yesterday. Now, what has me concerned here is that the company is announcing a buyback at a time when its overall strategy should be more focused towards growth. If you have it raised about 1,000 crores in QIP last year, largely to focus on growth opportunities going ahead, but it seems like some of that cash balance is being utilized to probably boost up the stock price in the near term, given that IndiaMart stock has fallen more than 43% in the past 1 year, and given the sort of crackdown that we have seen in internet and other technology stocks, that is not a surprise with bond yields going higher. The problem apart from this is that the earnings momentum from for IndiaMart is also slowing down on a sequential basis. So while the stock price may benefit in the near term from this buyback offer, I expect market to be a little bit more circumspect when it comes to how the stock will move beyond the buyback price.
Well, Dr. Lal Pathlab is the next stock on our radar. Huge build-up in short positions, it appears, both on the FNO side as well as through the SLB mechanism. Now, this company was one of the big beneficiaries of during the COVID wave because of the sharp rise in testing. Now, those tailwinds have kind of receded, and competitive intensity in this segment is picking up fast. That could be one of the reasons that the stock has been under pressure for some time in the recent past, and this trend could continue going forward.
Yeah, but I think if you zoom out a little bit on Dr. Lal Pathlab, I think the company has a very good cash position. So there is opportunity for the company to go out there and explore both inorganic and organic growth. As far as market share is concerned, it's been able to decently defend this market share, even though there has been competition rising from path lab companies which are funded by a lot of private equity players which are not in the listed space. Apart from that, Dr. Lal is also looking to get into the entire wellness space. Now, yes, the COVID tailwind has gone away. Tests are falling overall compared to the levels that we had in the past 2 years. But COVID testing in itself was not really a major earnings boost. What was a major earnings driver for Dr. Lal Path Labs is the overall wellness testing, product features that they had. They are higher margin products, so therefore there is possibility for increase in profitability going ahead. With the reopening happening, with hospitals again catering to different sort of patients once again, I believe that in the longer run, probably market will look beyond near-term uncertainties. That said, one stock where probably near-term uncertainties are going to be very acute is IIFL Finance. Well, if you look at it on the surface, the company's earnings were great. They were some could say they were even spectacular. But the asset quality is a concern here. We have seen a sequential deterioration in asset quality of IIFL Finance for the past 3 quarters now. If you look at the stage 3 NPAs, which is basically loans where the EMI has not been paid for more than 90 days, they have been rising on a sequential basis for the past 3 quarters, Santo. And this is happening at a time when the rest of the industry is actually seeing a decline in NPAs. I mean, if you look at the big lenders, if you look at some of the bigger NBFCs, yes, those who are probably in the microfinance space, they are still seeing some pressure. But IIFL Finance has a diversified portfolio, both in microfinance, gold loan, and vehicle financing, and throughout it's seeing, even despite that diversification, it's seeing a rise in NPAs. So that is something concerning. Yes, a lot of this rise in NPAs is driven by the change in norms that RBI brought in, where it has tightened norms for how NPAs are classified by NBFCs. But the other thing here is now that IIFL Finance throughout its history has been known to be a very aggressive lender, right? It has always been a very aggressive lender, especially when the cycle has turned for the financial industry. But aggressive lending, along with rising, bad loan pressure, makes for, could be a catalyst for, near-term uncertainty and near-term weakness for the stock, in my opinion.
Yes. Last stock on our radar today is Chennai Petroleum. Trading in the stock was frozen yesterday. The stock was up 10%. It's been rising for a while now. Big beneficiary of rising crude prices, because the company makes its money from refining crude. So
Yeah.
higher the crude prices, better the margins for Chennai Petroleum. Also, noted investor Dolly Khanna has picked up close to about 1 million shares, and this should
Wait a minute. Weren't you the one who always used to, lambast me for tracking fancy investors and superstar investors and what they are doing, and you should never ride on the coattails of the big wigs?
Okay, CJ, so it goes like
Interesting,
this, that there is a fundamental side to it. Plus, I'm not saying that it's just one factor where you have a noted investor backing the stock. There's also the fact that it's gaining, refining margins are at their highest, are at multi-year highs, and that's driving the numbers of Chennai Petroleum, which was also evident from its fourth quarter earnings.
Let's even look at the fundamentals. Okay, yes, I take your argument that refining margins are at multi-year high, but Chennai Petroleum has a shock coming in, in the near term. Exxon yesterday announced that is announcing a force majeure at one of the biggest, oil fields in Russia. Excuse me, and Chennai Petroleum was actually getting supplies out of those, those oil fields. So therefore, it is likely that it is going to face a lot of supply disruption from that Russian oil field in the near term. That said, yes,
prices don't seem to be indicating any of that yet. You're
yeah,
seeing
because
a 9%
at this
jump
point
in
of time,
prices
it's a trading bet. At this point of time, it's a trading bet, and I absolutely give that. But how long will this GRM sustain is the next question. Whether this is, see, these GRMs have been driven up by Russian sanctions and the uncertainty around Russia and Ukraine. As possibly we will see other, with such a high margin, it is very likely that production will be boosted by other refiners. Not today, maybe not tomorrow, but in the coming few months. And therefore, it is very unlikely that you see these sort of record high, gross refining margins sustaining for a very, very, very long time.
Well, that said, it's time for us to let you get back to your
Yeah.
trading terminals. Thank you for watching this episode of Markets with Santo and CJ. I hope you liked the show. Please do post your comments.
Yeah, and do follow us on the social media links at the bottom of your screen. And for rest of your updates, stay tuned to moneycontrol.com and the Moneycontrol app. We'll catch you live at 3 p.m. again with the entire day's action. So stay tuned.